Hey Bulls, how we doing? It's Chase. It's the Sherpa. A couple changes. The website is going to change from Ever Bullish to Follow the Sherpa. The Instagram has changed to Follow the Sherpa. More on that later. Straight up, hey, happy Juneteenth, happy Father's Day. It's also my birthday today, so we're kind of getting triple whammy. But I want to get you guys the trades early this morning, and it was going to be a real simple one. So check this out. I've made the Substack post and we're going to get right to it. So what we're going to do here is I just want you guys to profit off the Carnage. This week's game plan is all about how do we hit the easy button? How do we keep this early? How do we keep this easy rather without jumping into early on buying the dip? So I have zero long equity trades. I do have a long interest rate trade, and we're coming off the SOX trade winner last week. I told you guys to short Riot and Mara. I made a killing on that one. I'm actually still in one of those trades. I'm sure y'all are real thankful for that too, but just straight up, like, this is easy if we don't buy stocks right now. There's a couple of inverse ETFs that we could talk about, but just straight up, like, this is going to be a week of, if you're going to buy the scalp, just scalp it. I'm not holding anything more than a day. We're going to feel like we're bouncing off the bottom, but we're not bouncing off the bottom. So here we are. Here's the Substack. Remember, you can subscribe to this Substack. It's $20 a month. This is my full-time endeavor. This is how I rock. This is what I do. We got a lot of profitable bulls out there. So here we are. Last week was absolute carnage, but the type of carnage that we expected, and last week actually goes down as my fourth most profitable trading week this year. So yeah, you guys know that too. Made a little bit of cash, made a lot of cash. And it is nice to choose not to have to play in the markets, and we can instead trade interest rates using ETFs as well as options. So here's kind of what we're looking at here, though. The crypto carnage. It was all crypto last week. It was also just all news on the market. So this is Market Watch. Negative news, why the stock market is nervous. Dow's lower. Dow's below 3,000, 30,000. Dow S&P snap a 5-day skid after the biggest interest rate hike since 1994, and the Dow's fall for the fifth straight day. So it's just, we're getting a lot of negativity. All of my friends that are still in the business, including hedge fund managers, professional asset managers, financial planners, and such, are kind of telling me that they're getting real tired right now. And when your financial planner is tired, it's because the market is upset. The market is doing what the market does, and it's acting, in that 10 or 20% drop time. And the financial planner, sorry guys, love y'all, but you guys are time to earn that money you've been making with poor results. So Kitty's got claws today. If you can't tell, Bitcoin took a massive nosedive. I called that. That was an easy one. If you watch my video from last week, you'll know exactly what I'm talking about. I noticed a correlation, and we exploited that correlation. And again, you're welcome on the Riot Mara and just bearish calls on Bitcoin and the Bitcoin miners and Ether and the Ether miners and crypto in general in its correlation to interest rates. So enough with resting on our laurels. Let's go make some money. So the hypothesis this week is that we're going to trade sideways. It's still not time to buy the dip. Listen to me. It's still not time to buy the dip. If you're talking a long-term holding account, fine. If you're talking in an IRA, fine. I got some options for you, but this is not the bottom. There is a lot more to go, and it's going to be a sideways. It's ping pong. So what are we doing? It's ping pong. We scalp trades. And also, just to comment, if you are going to buy in your long-term holding accounts like IRAs and stuff, I love picking up NVIDIA. I love picking up Tesla. If we're talking, let's say 3 or 4 years down the road. And then most importantly, I didn't even think about this until now, we're going to say Amazon. It's going to be cool to pick up Amazon. AMZN. It's going to be cool to just say, hey, I bought Amazon back when it was at 100 something. I think it's at 100 right now. So maybe it's 120. Either way, this is likely going to be one of those stocks that does continue forever. And go ahead and pick it up, but only in an IRA, particularly in a taxable IRA. In a traditional IRA or rollover, because in the Roth, I want you to be even more aggressive than that. Okay. Just a comment. Y'all know I love American Express. Remember, American Express Warren Buffett's favorite financial stock. Warren Buffett has been buying this stock every single year since the 80s. And just what happens in bad economies and bad markets, people put things on credit cards. Credit card companies are typically a good way to basically hedge negative moves in the markets. And if rates go up, then that means the rates on the American Express go up, and then those horrible bastards are going to continue making your money. So why don't you get on the right side of that and go long American Express, particularly in a retirement account? So that is one stock that I don't hate right now. It also does have a small dividend. And I repeat, this is a perfect time to buy American Express, but only for long-term holders and IRAs. This is an interesting chart. Y'all can go subscribe and read this yourself, but this is talking about how Fed tightening always breaks the economy in one way or another. We already knew that. You guys are intermediate to advanced traders, so you already know that. I certainly already know that, but when we see these rate hikes, I remember this one. I certainly remember that one. I was a brand new puppy dog, fresh face, ready to go in the markets, just past my Series 7 at that time, back in 07. But these rate hikes are going to cause, and have, if you don't already know, caused tumultuous markets, and it's time to profit on that. But you don't do it by only going long. You don't do it by this bullshit AMC bag holding kind of meme stock madness. That's just dumb investing. So history says the next bull market could be 6 months away. I do remember this as well. Just a quick anecdote: 2008 October. I was working at this horrible chop shop in San Antonio, and I was on the floor as a financial planner, basically just begging friends and family to do business with me. And at that time, in October, was the big market drop, right? 777 points down that day. And it was kind of like the next rendition of 1929. And basically people are going, okay, well, now that this happened, we can buy back in. And then maybe a month later we can buy back in. And the real bottom was actually on March 3rd of 2009. So that's exactly 6 months later. I'm not saying it's going to happen like that this time, but I am saying that this is not done. And then even more on top of that, just to create the kind of the theme of what's going on here, is we don't want to hear this, but it's also not time to catch the bottom. Like I've been saying, it's definitely not time to catch the bottom, especially because Jay Powell came out and he's warning us. He's kind of winking at us. He's nodding at us. Remember, he's telling the baby we're going to have to leave the party in 10 minutes. So he's saying the Fed rate hikes are likely to be 75 basis points next month. So what he's doing is he's putting us on this knife edge. So it's, if the market hates this rate hike and then sells off another 10%, guess what? He's going to only raise it 50, but he's going to keep 75 on the table so that it's good news that he only raised it 50, right? Oh, well, at least it wasn't as bad as we thought. The hurricane has passed. The storm is over. The boat's still in the harbor. So he's kind of doing that. If he's hedging his bets here, then what's most likely is that if the market does not bounce a little bit, at least over the next month, and continues to sell off, he's going to give you the 75. So rule number one is don't fight the Fed. The reason for this, we're going to swing trade stocks only. What we're going to do, we're going to scalp stocks only. Swing trading is going to be very risky. I don't mind risk, but that's going to have to kind of be up to you. Go ahead and text me. Remember, all of my bulls get the ability to text me or call me about their position. So if you do want to subscribe, that is a huge benefit. And then this is still building a hypothesis for my big trade this week. Big trades, commodities, energy market. Brent crude fell to 113. West Texas, which is what we really ought to look at. Fun fact, if you didn't know that now. $108 a barrel. So what I suggest doing is that during this sell-off, during this just after a massive spike up to 125 in a barrel of oil, this sell-off is essentially, this is demand. This is people going, dude, I cannot fill up my gas. And I feel that. So the easy trade here, the way to hit the easy button, ERY is a direction, 2-time bear. So this means that all of the big energy stocks in ERY are going to be like your Nobles, your Oxys, your Exxons, your Chevrons, your Marathons. We're just going to bet against them, and we're going to bet against them double using ERY. So you just buy ERY or you can short. I like shorting MRO using a put. So you can buy a put on MRO, you can buy a put on Devon, you can buy a put on Exxon, you can buy it on whatever you want. I prefer doing it on MRO this week. And so what we're going to do is we're going to buy ERY, make our money. I expect 15 to 20% in that. And then at some point in the future, we're going to flip it to the inverse and go ERX again, which is the long. This is how we're making money. We're making money on the ping pong, baby. Ping pong, ping pong, ping pong. And then finally, the TLT trade. So based on this chart below, if you're new here, you're seeing that there's a long-term downtrend in treasuries. And the reason is because when rates go up, treasury prices go down. And this ETF is on the price of the long-term treasury, which is 20-year notes. So what's happening is that each time they raise rates, we get one of these big sell-offs. Boom, big sell-off, big boom, big sell-off. And then the market, so this is the week after. In the week after, we usually get a bump up. So this went from 113 to 120 last month, and we went down to 108. So I expect this to go up to like 117, 118. So remember, we've been printing money in the long-term downtrend of TLT because it directly inverses the yield on interest rates. When you hear interest rates are going up, that means the price of TLT is going down. And that's why we've been shorting it and consistently making very, very guaranteeable money. So, however, after the market absorbs the news, we notice the weakish long bump. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7, 8. 8 days, 5 days, average it to 6.5, 7.5. And what that means is we got about a week worth of trading where this actually goes up. And then what do? We flip it and we buy puts and it goes down. So remember that's the way we're going to do this. And this chart shows it a little bit better. This is the year chart on TLT. So we've been shorting it since basically March. We've been making all this money on the downturn, but there's these periods where it pops back up. So because of that, I just think that July 22s, which are the monthlies, July 22 monthly long calls. So you can buy a call at $3.25. Go ahead and do this on Tuesday. Remember, markets close Tuesday at the $112 strike price. That would put our profits, break evens right there at, what would that be? 115.25. Yeah, so 115.25, and that's in 1 month. So the closer we move to that, the more guaranteeable profits we have. And then subscribe to the Substack, guys. I just love this. I love the profits we're getting. This is really cool that we're documenting all this trade, and y'all are coming with me. I'm carrying the bags. You guys are climbing the mountain. I'm the Sherpa, baby. So we did change the name. It's still everbullish.com. I'm having a new website built called Follow the Sherpa, but straight up, it's just a Substack. I'm done selling portfolios. I'm done with all that. The best value to you guys is just the $20 a month. You have a professional trader. You got a cell phone number. You get actual trades in real time. So these trades that I'm showing you, if you want the time and the price of when I'm buying them, you got to subscribe to this Substack. It's only $20 a month. I give you a discount, $200 a year. So you get 2 months for free if you just go ahead and pay me the year up front. Weekly game plan, what's going on. So that's there. So I'm also giving you all the information for long-term traders like I did, midterm traders like I did, and the most profitable swing trades. I also give you lessons on RSI, MACD, dip trades, scalps, order types, ETFs, and much more. The real value is getting my phone number. You got me. I got your back. You can ask any of my subscribers. You can ask any of my bulls. I have deep relationships with all these guys. So jump on the train. Let's climb the mountain together. Happy Father's Day. Happy Juneteenth. And happy trading, bulls. Love y'all.